welcome back to another episode of the Accommodation Show. We are here for part 2 of Dennis's story of building Casiola. Welcome back to the show, Dennis.
Thank you.
Last episode, we talked about your business, and basically we spent a bit of time on that sort of getting started, those first steps in a business. There are different alternatives, and I thought that was a very important part to cover for those that are looking to get into short-term rentals, into Airbnbs, or even just starting their own business. I think that this week we should continue your story and your journey, because you said that within the first year you actually contracted rather than grew the business.
Mm-hmm. Yeah.
And then you started to build a bit of reputation, and you started to grow things. Now you're let's go from there. Let's go from that part of the story. So you've done your first year. What are things looking like for you?
Yeah. So again, financially, it wasn't bad, but I had ambitious growth plans that I was not able to accomplish. So I also have to be honest, I was completely new to the industry, didn't know anything about the business. So it took me a while also to figure out what was working, what wasn't working, what software to use, how we could make improvements. So there was also a lot of I think, internal focus on how the business was operating. Maybe not enough external sales focus to really grow it. And that's also all those things and mistakes I made is also what we use to build our franchise concept, basically to help other business owners and managers that want to scale their business to avoid making the same pitfalls that I did in the beginning, and just letting them skip a few steps and focus on growth right away from the beginning.
Yeah. What do you think that was your own mindset that made you, that kind of held you up there?
I think it was just a lot of things that I didn't know and understand yet, and yeah, if everything is new, everything takes a little bit longer figuring out how all those channels work and which websites you should be on. I remember when I started, there were a lot of subscription services. They no longer exist, but that was also one of the first things I did, was just look at performance of all those different websites that we were paying a monthly or a yearly fee to advertise our properties, with no guarantee whatsoever in getting ever booking. And what I noticed, that 99% of those websites did not deliver any bookings or results, or at least not a return on investment. Maybe you got one booking, but if your subscription was $300-$500 for a year, yeah, you didn't really make your money back. So we actually canceled all those subscriptions from all the website. The only one we kept was Furbo back then, still home away. They were doing a lot of subscriptions, and they had some traffic. So they were still giving us a positive ROI, but all the others I had to just get rid of. It was costing us money. So a lot of those things I just didn't know. I was new to the industry. Had to figure everything out on my own. Spent a lot of hours and a lot of weekends and nights just on those kind of things. And it just takes time to become a specialist. They always say, what is it, 10,000 hours before you really master a certain subject. So I probably had to do my 10,000 hours first.
Before you're ready. Yeah, it's really it's very interesting, because I think that a lot of people can get quite stuck in the systems and the processes rather than growing the business, adding more customers, doing sales, business development, and that sort of thing. And as a founder or CEO, you can get quite stuck in the parts that you're quite comfortable with, the parts that are a lot easier for you. It might be more challenging for a founder to go out there and network, or pick up the phone and talk to people, or even think about growth, because if you pick up more properties, then all you're doing is you're creating more work for yourself. Every day you've got double the number of phone calls, double the number of guests coming in, and that sort of thing. So I think it can I've seen many founders get very stuck
Yeah.
on growth because it's very challenging.
Absolutely. And that's what we also see with our franchisees. But luckily, we're able to really help them. And so a lot of them are focused on getting everything right on the operations side, right? So they sign a contract, and then they have the onboarding and the first guest and all those things, and they want to figure it out, that they have all the vendors lined up. And they completely lose focus of the sales side. And then a second contract maybe comes in, and then they're busy again. And before you know it, if they had a target of getting to 10 or 20 homes in the first year, you see that they're so busy on the operations side that they don't get to their targets. So it's really important to stay focused on the growth. That's the most important for your business. And once you grow and you have more homes in the system, it's a lot easier to find an employee to do inspections and to make sure that your homes are clean and ready for guests and resolve guest issues than getting someone or hire someone to do sales. So it's really important to stay focused on that, get to a certain amount of homes as soon as possible, so that you can afford someone to do the operational stuff and the inspections and so on.
Yeah. So you've got your first 20 properties, and then walk me through sort of those first few stages of growth. What were those sort of first inflection points?
So first few properties we started with around 15 to 20. So then we lost a few, and then it's finally started to roll, and we were getting more. And people were talking about us. We were all located in one resort, so they saw us walking around. You meet people, we do some HOA and board meetings, and so people start getting to know you, and they hear good things about you. They tell you their friends about you, and that's how you get more homes. Now, our next like growth spurt is also something very interesting that you may not expect. But what I did is there were a few competitors in the same resort where we were working, and I knew a lot of them were located quite far away. So the resort where we started was a little bit of an outliner. Was not in like the Disney area where most other homes were, but more closer to the airport and Universal and SeaWorld. So what I did is I actually reached out to a few competitors, asking them like, hey, we're located here in this resort. I know you have an office 30 minutes away. Would you maybe be interested in selling some contracts to me? It can streamline your operation. We are really specialized in this resort. We get great results. We have great owner satisfaction. And yeah, probably one of the largest operators in Orlando that I reached out to. And it was just through LinkedIn. I didn't know anyone there. I just Googled the general manager and reached out to him through LinkedIn. And to my surprise, I got an email back saying like, yeah, we actually have been thinking about getting out of that resort because it's not really close to the rest of our operation, and it's hard if a guest doesn't know how to work the TV. We have to send someone out for 20 minutes or 30 minutes one way and then getting back. So it's also not efficient for us. We would be open to a deal. And if you want to meet, let me know. So of course I said like, yeah, let's meet as soon as possible. I think the next day we had a meeting. We talked to each other. I explained what we did. They were willing to do a deal. We agreed on the price, and I think within a week we had a signed agreement to take over. Back then, I think it was 20 contracts, so we were at around 30 or 40. by that time,
Wow.
we got a deal to buy 20 more properties, or at least management agreements in the same resort. So I already knew exactly what we could do revenue wise, what the cost and the profits would be. So I was able to negotiate the price. We made up an agreement, a
How
week
does
later we
how,
started the transition.
That's awesome. That's awesome and unexpected, which is great. I
Yeah.
lots of questions around that. So one, when you're approaching someone else to sort of with this kind of an offer, then typically it weakens your negotiating position because he's not selling, you're the one who's buying,
No,
or he or she.
everything in business is you have to have a little bit of luck. That's what you hear a lot of people say, right? It's like a lot of effort, but you also have to have a little bit of luck. Now, if I didn't reach out to that other company, I would have never gotten the deal. But I did reach out, and it was just the right time, the right person to do a deal, and we got it done. Now, I reached out to a few others, and for them, it wasn't the right time, and they were not interested. So don't just
Don't-
sit there and wait
Yeah,
until things happen to you. You have to go out there and try things. And again,
sure.
the reason that I did it was because I was so much behind on my growth plan that I thought, like, yeah, by just getting out
Just
one by
buy
one,
your way into it.
get to my target. So let's try something different. Maybe there are some property management companies that want to get out or retire, or they're just sick and tired of doing it. So that was my thinking, and yeah, I guess I got lucky. And a few years later, did another deal in a different resort with the same company. And this time they came to us. They said, like, hey, we've got another few contracts that we're gonna want to get rid of. Are you interested? And of course, I said, yes, let's do it, because the first one was very successful. And we did another deal, and several of those homes we were still managing 10 years later. And that was for us
That's
like an opportunity to get active and more owners in a different
that's
areas. So yeah.
That's fascinating, especially when in the market that you're in, where there's such a high saturation of property managers of properties. Obviously, it's a large market because you've got so many people coming to you,
Mhm.
but also for you to be able to stand out. And typically, most property management companies that I talk to that have grown from the ground up, it's all referrals and word of mouth. They're walking around the community, having a cup of coffee, talking to everybody, and everybody
Mhm.
knows everybody that has properties, and they can start to manage them. Where in your circumstance, that just doesn't exist. You're not really going and having a coffee with someone that owns, 3 or 4 different condos or different units that you can then put onto the market. But before I go into that, I do want to ask. So, obviously, you had the experience of buying the first business that then gave you a little bit of background as to how to structure the deal for the next ones. Uh, any advice that you'd give someone on how to figure out how to put together, if they're trying to go and buy 5 contracts, 10 contracts, they've maybe never done it before? What are the steps that you would suggest they take to try to execute that sort of a deal?
Yeah, yeah, absolutely. So there's a couple of things to look at. First of all, also something we learned the hard way. You need to find a seller where there's a good match with your company, because if you buy very very small companies, a lot of times there's a very strong relation with the seller, with the previous business owner. So we noticed that we had a lot more success by buying contracts from larger companies where there was less of an emotional connection with the
Hmm.
seller. So if we did one other acquisition that was not a success, from a small mom and pop company where I think they had 15 contracts. We bought them. We almost lost them all within 6 months, not because of what we did, but just because
Bad
yeah,
relationship.
it was different than what they were used to. And if we bought contracts from slightly larger companies, it was just easier, because then we all of a sudden could deliver a lot more and better service than these larger companies were providing to the owners. So for them, it was a win, and for us too, obviously. So really look for a good fit and whatever that may be for you. And then if you look at businesses or contracts, I would say to buy, and that's important in our industry. I would never buy the business itself. So if you buy a business, if you buy the shares in an existing business, you also buy all the liability that comes with it. So if a previous guest all of a sudden sues you after the sale, you're on the hook for everything. If you all of a sudden a couple of vendors contact you because they haven't been paid 3-4 months ago, all of a sudden it's now your responsibility because you're the business owner. So what we do in our industry usually is we do an asset deal. So we just buy the contracts and maybe any like supplies that they may still have. So we don't buy any of the liability. We only buy the assets. Now, in order to do that, you need to look and review the management contracts from the seller. So there needs to be an assignment clause in those contracts. So a clause saying that the management company can assign the management agreement to someone else without the owner approval. If it somewhere says there that they need owner approval, that means that every single owner has to sign an addendum or a new management agreement, which makes it a lot harder because you're always going to have a few that don't respond or that you cannot reach or that just were already on the edge, and now that they have to switch and sign a new agreement, they're gonna go somewhere else anyway. So you want to look for those contracts and make sure that they have an assignment clause, or that in your state or wherever you're located, that you are legally allowed to assign contracts without the owner's approval. So once that's done and checked, you want to, of course, look at all the future bookings and make sure that you have an exact idea how much guest paid in deposits and future bookings. Because again, at the closing, just like last time, you're supposed to get a check from the seller, which sometimes in my case, if almost every time, is larger than the price that you pay for the business. But you want to make sure that you have all those monies accounted for, that you know exactly what they already received and what they still have to receive, so that you're not out of pocket anywhere. What we also usually do is we pay a big chunk at closing, and then we keep a part in what we call escrow. So let's say if you agree on paying $100,000 to buy a set of management agreements, you're going to pay, for example, $70,000 at the closing, and then $30,000 is kept in case that these owners would leave your company within a certain amount of time. So that can be 3 months, can be 6 months, whatever you agree on. So you want to make sure that you don't buy like 20 agreements and that they're all gone within a few weeks, because you never know what's really going on, right? These owners may already have canceled, and that's why that business thought, okay, let's sell those contracts real quick so that we can make a buck up then, and then they're all gone. So that's something we didn't want to do. So we always have usually 70-30 in escrow, and during that 3 or 6 months period, the seller always has the option to replace agreements that we lost. So if they still have clients that they've been working on and they want to join and they refer them to us, and they lose another agreement, then we can offset the lost contract with a new one. But also always keep something in escrow that also keeps the seller motivated to assist you with the transition. Because what you don't want to have is that they, when you sign and you pay them the money, and that they're gone, and that you cannot reach them anymore for any information that you need about an owner or a home or a payment or a future booking. So you want to keep them motivated, and having that the escrow part is usually a very good driver for their motivation. What else would I advise? So yeah, communication is also key at that point in time. Communication with owners. In the beginning, especially, you have to over communicate. You can spin the story however you want, of course. Sometimes you want to say that you partnered up, so that they don't feel like, oh, the previous owners are completely gone. You can say you partnered up, or you're gonna work together, whatever it is. But you wanna make sure that all the owners, are at ease, and that they have a good feeling with it. And finally, another thing I would say, also always make sure that you have a good non-compete in place with the seller. Even if it's an existing company, of course, you're not going to be able to negotiate that they are no longer going to be active in the business, but you can put in writing that they can not do any business with those owners, or in that specific community, or in that specific area of town, so that you don't have to compete with the seller, because they have that relationship already. If they start a new business and they contact all these owners, they may be gone again. So those are a couple of the tips that I would.
I'm blown away. I wasn't expecting that from a simple question to get that much. It's really useful, because I think lots of people wouldn't know these things. And then if you're looking for a broker to help you through the process, do you need someone that understands vacation rentals, short-term rentals, or would any business broker do?
Well, if you have a broker that understands vacation rentals, great. Now, depending on your area, you may not always find them. I did do my first deal with a broker because I was new to the US and wasn't entirely sure how everything worked. All my other deals after that, I did completely on my own, even without attorneys. I already had my standard agreement from the first business I bought, so wow. I just it over and made some changes. And for me, it's also very important to
don't take his advice, folks. Don't listen to him.
No, this is not legal advice whatsoever. But especially today with ChatGPT, you can do a lot. But it's so important.
Don't use ChatGPT for legal advice.
It's so important that you do business with the right people, and you're gonna be making mistakes, and whether you use an attorney or not, you're gonna end up in misery. So it's better to try to avoid it. And for me, someone's word is worth a lot. I know that may sound naive, but so far I've been lucky. I've got a couple of bad experiences, but then I also just move on. It is what it is. Usually suing each other is not gonna resolve anything.
Yeah, that's right.
And it's important that you do your due diligence up front and avoid problems later.
Yeah. Amazing. Okay, so I think we've got about 10-15 minutes left. So let's see how far we can get into the rest of the story.
Part 3 coming up.
so we've got that's right. So we've got the next way that you scaled was to get some more doors in your own resort. Then, from what I'm hearing, you say then someone else approached you, and then you're buying into another resort. So a lot of the growth, I assume that you would have some properties coming to you and that sort of thing, but then a lot of it is also through small acquisitions in a very targeted way.
Mm-hmm.
Is that kind of the real secret to Casiola's early success?
I think in the beginning it definitely was, and the way I looked at it is like I had a limited amount of time to do business development, but I also had a limited amount of funds to do marketing, because it's great. You can do a direct mailer, like to 5,000 people, but it's going to cost you probably $5,000 or more, which is also very expensive. And there's no guarantee whatsoever that you will get an agreement. You will also have to spend a lot of time in the design and coming up with a copy, and then having a website to link it to, and finding addresses and stuff like that. So my way of looking at it was just like, okay, I pay maybe $6,000 per contract, and you buy 10 or 20 contracts, which is $120,000. can I get this amount of contracts cheaper if I have to spend all those funds in marketing and pay someone to sign them one by one, than having to ramp up bookings and doing onboarding, because you need to pay a photographer, you need to add them to the system. Then the first few months, you may not have a lot of bookings yet. And by buying those contracts, I actually, according to my calculation, it was cheaper than getting them myself. So that's also a very interesting way to look at it, right? You don't have to spend money on photos because they already have photos. They come with a fully booked calendar. So again, you may get a home and it already has 20, 30, $40,000 in future bookings, almost guaranteed. Customers can still cancel, but it's almost guaranteed. So it's a much safer and better return on investment, especially in the beginning, if you haven't figured out exactly how to target owners and have them sign up with you to grow your business and scale at a relatively low rate with minimal risk. So that is how we started, how we got to a certain point, and then after a while we really figured out the way on how to grow organically. So we haven't really done acquisitions in the Orlando market anymore in many years. But if we expand into other territories, and it's not through franchise, but with company owned entities, we're always looking again to start with this acquisition and then grow from there. It's much easier to go from 20 to 30 than from 0 to 10. So it just makes sense for us. You can put a team in place. You can build the operations.
You can add properties onto it, right? So you've already got the cleaners, you've got everything ready. Rather than if you've got nothing, then you've got such a huge expense that's every single month that you can't reduce. Yeah, that makes sense completely.
Exactly.
So if
gain credibility from owners, so you're also much more likely to get those next 10 contracts if you already have 20 homes than if you have nothing to show for and you're trying to convince those first few owners with no results or backup or anything.
Got it. Okay, so you guys are going along. So you said that at some point you kind of were like Orlando was more that sort of organic growth. And I assume that, so, there's all the marketing, all the sort of standard stuff that you would do, and then new territories. So how many units would you say that, or how many properties would you say you got to when there was that kind of inflection point of moving into new territories, or that sort of plateau of organic leads? What volume were you at that stage?
I think the reason why we moved to other markets besides Orlando was not that we plateaued in growth, but was actually the pandemic. So when we got shut down and then eventually were able to reopen, we saw that everyone around us in beach markets and mountain markets were just thriving. All those guests were booking, they were locked up in their home, and now all of a sudden they were working from home, or they were not working at all, but were getting money every week to stay home. They all wanted to book homes, but they didn't want to come to Orlando. No one wanted to go to a theme park in the middle of a pandemic. So that was like an inflection point for us. Like, hey, we're really exposed here. We're really dependent on the Orlando market. Now it's a pandemic, but we can have hurricanes here, other natural disasters that could happen, and then your whole entire business is tied to that one geographic location. So that was for us
sorry, Dennis, when you started. And then you got more contracts in the same resort. That was something I was going to address, was that your risk was through the roof because it was all one place. So if something happens, you get kicked out, the place burns down, whatever, right? You're toast, you're cooked. So it's really interesting that you say that it was kind of not only growth, but also de-risking by going to new territories.
Yeah, absolutely. We were still growing in Orlando and are still today. But yeah, we just saw that it's very risky, especially at the size that we were back then. We were at, I think, around 300 homes, 350 maybe, during the pandemic. So you have a big operation, a big overhead, a big team, and leases to pay, and cars, and all that software. And all of a sudden, yeah, revenue just plunged, and you still had to pay all those things, but there was nothing coming in anymore. So, yeah, for us, it was definitely de-risking and being active in different types of markets.
Yeah. Okay. Cool. So then, give me the different markets you kind of approached and went into after Orlando.
So first one was actually Aruba, uh, not a simple choice, right? But a few years earlier, I met someone at a conference in Vegas, and we started talking, and she explained me that she had a small business in Aruba. She started around the same years as we did, 2014, and she was sharing her struggles. So they had around 15 homes. Then at one point they scaled up to like 20 homes, but then things started to fall apart. Yeah, you saw cracks coming into all the procedures, or there weren't any procedures. That was probably the problem, and they had to scale down again to make it manageable for them. So we stayed in touch for probably two years. Once in a while, she would reach out like, "Hey, Dennis, I'm dealing with this issue. How would you resolve it?" And then I would share what we did when we had that issue. So we stayed in touch, and she had been asking me for like 2 years. "Oh, you should come over. I want to show you what we do." But I was so focused and busy in Orlando and growing that I said like, yeah, I don't have time now, maybe later. And then the pandemic came, and all of a sudden I had a lot of time. And yeah, I remember it was at the end of 2020, December, I booked a plane ticket to Aruba for like a crazy amount. I think it was $60 or something. Now you can't find anything under $600, but
Yeah.
back then it was $600. I flew to Aruba, not with the intention to expand to that market, but more to help them and coach them maybe a little bit, look around what that market looked like. And yeah, after spending a week there with them, I saw so much potential. Like the whole market back then still operated the way that Orlando was operating like 10, 15 years ago. There were still, most rentals were still like weekly rentals. There was no dynamic pricing. It was like a seasonal pricing chart. Guests had to pay for utilities after they checked out based on their usage. So there was a lot of things that I thought like, oh, I can't believe that they're still operating this way. So I saw so much potential, great people there. Locally that could help us there. I would have never expanded into Aruba without them. So again, the people here was for me the most important thing to do it. We didn't have franchise, we didn't have anything. Again, we got together in business without any lawyers involved, but just an agreement that I made up. Very basic agreement, because again, trust is everything for me.
You sound like a cowboy, man.
So like, but it is. I mean, you can screw each other if that's what you want to do. No lawyer is going to be able to avoid it. But again, not legal advice. Not saying that you have to do the same. But we just got working, and yeah, the business just exploded. We were able to get them from 15 to 150 homes in less than 2 years' time. They have an amazing office now. They have 25 people on staff. We built our own laundry over there. So it was an amazing success there. And that made us realize like, hey, we've done it now in Orlando. We just did it in Aruba. Let's try and see if we can help other business owners and other managers do the same. And help them break through that ceiling that they have at 15 or 20 properties and get them to 100, 200, 300. So that's how we came up with the Casiola franchise concept. And now we've done it in a few locations, and yeah, it's very successful.
Amazing. Look, I think I'm gonna cap us off there, my friend. I think it's a good finish to the story. And I know that there's a lot more to come. But I think in terms of those tips and that advice, in terms of how you build it and things for you to think about and things that you can do, there's a lot of key sort of takeaways for me. Is one is relationships are really important for you as you grew, and the initial reach outs to people saying, "Hey, let's collaborate. Let me pick up those contracts." It was about being able to sit down and have a conversation and have a chat about what you want to do and where they're at and that sort of thing. All the systems, the processes, all the branding, all that sort of thing is obviously you're very, very passionate about, really understanding the business very well. I think that's really important that people go out there and understand their business. Or understand, vacation rentals, short-term rentals. My question for you to wrap us up, are there any final sort of tips or piece of advice that you would have for somebody that, let's say they've been doing this for a while. Let's go for a bigger one. Let's say they're 100, 200 properties. They understand their market. What would your best advice be for them?
Best advice, well, everything depends on what they want to accomplish, right? But I know it's a very hard business, especially if you're doing it for a while. So you need to make sure that the business can run without you, that you have really good processes in place, that you have the right people in place to run the business for you, and then you can really focus on what's new, what are the newest trends, how can we grow this thing faster. Also, something I see is a lot of people overcomplicate everything that they do. So if you want to scale, you really have to simplify things as much as you can. You cannot have 20 different management agreements. If you want to scale, you cannot have 20 different commission percentages. You cannot have one owner paying a cleaning fee and the other one only per hour. And you have to simplify your business to scale. And that is something that I see people doing a lot. They're like overcomplicating things. You have to really pick out what's important for you, what you want to keep, and make everything else as simple as possible. Yeah, simple is hard. It's funny, but if you ask people to do something very simple, it's hard. Most people just want to overcomplicate things.
Well, I think the iPhone is the epitome of simplifying things, right? Like it's impossible to create really simple designs. Everything technology-wise is adding more and more and more. And actually, funnily enough, if we look at AI and where it is right now, it's exactly the same thing. They're adding more and more and more, and the products are getting super confusing, and no one knows how to use it anymore. So anyhow, I don't want to digress. Dennis, thank you so much for coming onto the show and sharing your insights, your knowledge, your path, your journey. It's really fascinating. And, we've done 2 episodes so far, and I could easily do 3, 4, 5 with you and learn about your journey. It's fascinating, quite inspiring as well. I'm looking forward to seeing what happens in Spain and maybe coming for a visit, and we can go and do some inspections over there. Folks, if you're listening to this on YouTube or if you're watching us, then do give us a subscribe, hit that button, give us a thumbs up. If you're on the podcast, then leave us a review. Dennis, I'm so grateful. If folks are interested in Casiola, then jump onto the website. It'll be in the show notes below. Take care of yourself, Dennis.
Thank you so much. Always fun to be on the show.
Thank you. Take care. Have a good day.